ICT has said his final goodbyes, and with that, he has left us one final strategy. Now, he has revealed the strategy to us in a 3-hour long Twitter Space video. In today's video, I will be simplifying everything you need to know for this strategy, how you can implement it, and how you can become masters at the strategy. I guarantee, guys, you'll become profitable after learning the strategy. It is so simple, a beginner can even learn it and become profitable off it. Now, before I continue with the video, I want to show you guys an absolutely amazing investment opportunity. I will get you funded 100% guaranteed. Now, if you think I'm making a bold claim, you can check out our group, the first link in the description, and see how many accounts we are passing. We are passing accounts every single day. Here's a 200k account we passed. We've managed to get this client funded $200,000 worth of capital, where any profit he makes on this account, he gets to keep, he gets to withdraw into his own bank account. There are so many people getting funded every single day, guys. Now, if you're still skeptical, you do not pay me a single penny until I get you funded. And if we somehow do fail your challenge, which we have never failed a challenge before, we will pay you back every single penny, plus $1,000 on top for wasting your time. This is a zero risk investment for you guys, so what are you waiting for? Click the first link in the description, join the group, and make sure you drop me a message at EMSCapitals. Alright, what do I look for? What market conditions do I expect for this strategy to take place? Now, firstly, I only trade this strategy in kill zone times. This creates the highest probability setup for this strategy. So, kill zone times such as London kill zone or New York kill zone. Now, onto pairs. You can trade any of the Forex pairs using this strategy, and NAS 100 and SPX 500. Onto the strategy itself, it is very simple, guys. Now, we are only going to trade this strategy on 2 time frames, so the 4-hour time frame and the 15-minute time frame. Now, for the 4-hour time frame, we want to check market bias. Now, over here on the 4-hour, we'll see what direction is market heading in. Are we bearish or are we bullish? So, as you can see in this example, we are bullish, in fact. So, I will be looking for bias. If we are bullish on the 4-hour, we're going to be looking for bias. If we are bearish on the 4-hour, we'll be looking for sells. On the 4-hour, we also identify our premium discount levels, our PD arrays. Now, we want to check from the last significant low to the significant high. This is our dealing range right here. This is where market is dealing and trading in. So now I've written here premium, sell, discount, buy. So anywhere above the 0.5 mark is premium. Anything below it is discounted. So as we are in fact bearish in our example, bullish I mean, we are looking for buyers. So in confluence with that, we want to be in a discounted area of our dealing range as we are below the 0.5 mark, which enables us to buy. Now, I do add in confluence a PD array such as an order block, fair value gap, running an old high or low. You get it? So if you guys do want me to make a video on PD arrays, just let me know down in the comments. So as you guys can see here, if we did have an order block here, this is added confluence for our trade, as you guys can see. Now, we identify everything on the 4-hour time frame, our market bias, our dealing range, premium discount, and our PD array if market taps into it. From there, we want to drop down to the 15-minute and look for a market structure shift with displacement. What does this mean? We want to start to look for a change in trend. As you guys can see, if we are going lower, we want to see market have a change in momentum to start get that first sign of bullishness. Now, to put it simply, guys, a market structure shift is a reversal pattern, is a change in trend. As you guys can see, if we are getting quite a lot of bearishness right here, we want to see a change in momentum for market to go from bearish to start to get those first signs of bullishness. This confirms to us that we want to long the market and take it to the upside. This is why we look for a market structure shift. Now, once we've got on our market structure shift to confirm our bias to the upside, in this example specifically, we want to look for our optimal trade entry, which is either the 0.62 mark or the 0.79 mark on your Fibonacci. Now, let me just show you guys. If you get out your Fibonacci, mark it from the swing low to the swing high. And if you don't have it set, you can go into settings, 0.62, 0.79, make sure you tick them. And from here, all you have to do is enter off either the 0.62 or the 0.79. You'd have to see what market is rejecting off. So in my case, theoretically, if market were to reject off this point right here, if I'd see market starting to reverse off either an engulfing candle or other sort of confirmation, I would enter from my 0.79 mark. Now, once you've gotten your optimal trade entry, stop loss below the 1 point, and as for take profit, you could target low hanging fruits. You could target equal highs, equal lows, opposing order blocks, opposing fair value gaps. You could even target all the way up to the original high. Now, this is a bit risky and it might not hit your final take profit. You could partial. take profits completely up to you. However, I do recommend aiming for at least a 1 to 2. So with all that in mind, let's move on to the real market and I'll show you guys a couple examples on the chart. Alright guys, I am on Nasdaq. I am on the 4-hour time frame and I'm going to be showcasing this 1 to 11 risk to reward trade. I'm going to show you guys how the strategy works so well and how you can catch it for yourself. So to start off, I'm going to delete everything off my chart so you guys can see what I am seeing. So firstly, if I do replay the market, you guys can see this is our dealing range. So from here, I'd simply draw up my GAN box. And now I can see my premium and discount zones. Now, if I do let market play, you can end up seeing how we do tap into the discounted area. Now, if you do look out and you zoom out on your chart, you can see Nasdaq has been bullish for quite a while. So I am looking for buyers. Man, my chart is quite marked up. However, we have been bullish for a long time, so I am looking for buyers. So this comes into confluence with market being in the discounted zone of our dealing range. If I do play out market a little bit more, you guys can end up seeing, let me just replay market a little bit, that we do tap into a demand zone right here. Now, from here, once we've tapped into our PD array, our discounted the level of demand, I'm going to drop down to the 15-minute time frame. Alright, now I am on the 15-minute and we are in a discounted area of our dealing range of our market. So from here, I'm simply going to look for a market structure shift as we have just tapped into our PD array, which is our demand zone. So market has left this lovely significant high, which I'd love to see broken for our market structure shift. So if I do play out market, you can see we do get body closure above the high. Now, after our market structure shift, market has left this nice dealing range right here, which when market does tap into either the 0.62 or 0.79 level, I will enter. So if I play out market slowly, you guys can see, boom, we do react very nicely off the 0.62 level. So from here, I'd wait for this candle to close and enter right at this candle right here. Stop loss above the 1 level, I mean. As for take profits, you could target low hanging fruits, or you could target all the way up to the original high. So if I do end up playing this trade fully, you guys can see how well the strategy really does work, as we are barely in any drawdown. As you guys can see, let me just play out the full trade for you guys. It does take quite a while, however, we do get there in the end. And boom, there we go. Just like that, you could have bagged yourself an amazing trade just following a few easy steps. So on to the next example. Alright guys, I am on a forex pair, EURUSD now, on the 4-hour time frame again, and this trade ran 85 pips. Absolutely amazing, guys. We had a 1 to 4 risk to reward, which is absolutely crazy, guys. So I'm going to break down this trade. So firstly, starting on the 4-hour time frame, you can see market is moving bearish. Market has been bearish for quite a while, since July 2023. So for quite a few months, market has been moving bearish. So this is when I did catch this range right here where market was dealing in, and I did see market did tap into our PD area, an order block right here. So market taps into this order block, and when I see this, let me just remove all the drawings to make it a little bit clearer for you guys. So once market did tap into this PD array, if I do replay the market and play one candle, you can see market does tap into it. Now, if I drop down to the 15-minute time frame, you guys can see inside of our PD array, if we do let market play out, we do get a very nice market structure shift right here. Let me just mark that out for you guys. Now, we've got on our market structure shift, which confirms our bias, which shows me I do want to now sell the market. We are in a premium area of the market. We are looking for sells as we are bearish overall on our 4-hour trend. So all these confluences line up, which then get me to this point where I am right now, where I mark up the high right here, all the way to the bottom right here. So this is our dealing range right now. And as you can see, market does return to the 0.62 mark. Now, if I do replay market a little bit, you guys can see in confluence with our 0.62 mark, we do have a breaker block right here. Now, this confluence just gives me more confidence when taking this trade, when taking this entry. So from here, I can be sure I want to place my sell at the 0.62 mark for our optimal trade entry paired with our breaker block. Stop loss above the 1 level. From here, I'm going to target our original lows. So now if I do play out the market, you guys can see we get a beautiful entry. This entry was absolutely insane. As you guys can see, we're in zero drawdown here. We get a wick tap in on the 0.62 mark and market instantly starts dropping off, starts to sell off. Now if I do play out the rest of the trade, boom, we do hit full take profit. Now if I did play out market a little bit more, I'm sure market did take it a little bit lower for about 100 pips. You could have caught nearly a 1 to 5, which is absolutely insane. Now I'm just going to quickly recap all the steps. So firstly, start off on the 4-hour time frame. Boom, we are bearish, so I know I am looking for sells. Now on the 4-hour time frame, I've identified our dealing range right here. I can see market is now in premium, and what do I spot when we're in premium? Market taps into a supply zone right here, our order block, our PD array. Now once we've tapped into our PD array, I hop down onto the 15-minute where I see market rejecting off it nicely. Market sells off. We get a market structure shift right here where market changes in trend. We get a change of momentum. As you can see, we go from bullishness, higher high, higher high, higher high, to then when we start selling off. Now I draw my Fibonacci tool with my 0.62 and my 0.79 levels marked out. I see we have a breaker block paired with our 0.62 as an added confluence, which gives me confidence on this entry. I enter off the 0.62 mark, stop loss above the 1, and I simply target our lows, our original lows. It's as simple as that, guys. This strategy can literally be learned by a beginner and you can be profitable that easily. Now, thank you guys so much for watching. This is it for today. Make sure you leave a like on the video and you subscribe, and check the first link in the description to get funded guaranteed. So I'll see you guys next time.